Good afternoon, dear members. Today we have a VCM on import and export of goods and services under the Fema Act. Now, for handling the topic, we have a speaker from Thrissur, CA VIPIN KK, who is the past chairman also. On the screen also, we have the very dynamic chairman of Thrissur branch, CA Anup Ji, also our VC, CA Aryan KK. Dear attendees, please make use of the Q&A link in the application for typing in your queries. The same will be addressed in the Q&A session after the presentation. Now over to the chair, C. Anup Ji, for the welcome speech and for sharing the session. Sir, please.
Thank you, C. Ajit. Good afternoon, ladies and gentlemen, senior members of the profession and other members. Welcome to the VCM on Fema, conducted by Thrissur branch of ICAI. Before moving to my duty of welcoming, let me inform you that we are taking a very short break from VCMs. This is because of the pressure on members on account of due dates filing in September, which is evident from the less number of attendees of meetings of late. So I do agree 30th September is the last date of filing returns for last year for both the GST as well as income tax. So we don't know whether it would be extended or not. However, we would be conducting more programs in the first 2 weeks of October. So after today, we would be meeting next month only, and we plan more exciting sessions in the coming months. Members, today's subject is import and export of goods and services under Fema, and the faculty is none other than our past chairman, CA VIPIN KK. Talking about CA VIPIN, you all know him very well, perhaps more than me. But in my opinion, he's one of the young CAs in Thrissur who updates knowledge really well. He was partner to senior member CA Varghese sir, and that experience has really helped him a lot. I'm very sure about that. Now he is practicing independently. He has been putting updates on various professional subjects in our official WhatsApp group. That very regularly that was happening, but of late we are not seeing it, VIPIN. So I request you to continue with that as we all value the input given by you on various topics. So VIPIN, I request you to continue posting your updates in the official WhatsApp group. So with these few words, let me welcome CA VIPIN to this VCM. I also welcome all the members to the meeting. Now let me invite CA Aryan, my vice chairman, for the formal introduction of CA VIPIN. Over to you, Aryan.
Thanks,
Aryan?
Chairman Anup Ji.
Yeah.
Our respected chairman, other management committee members. Sir, it's audible?
Yes, sir.
Yeah, it's why I'm honored today by our speaker, our past, and it's a regular faculty. It's already our chairman that he has taken me for our members. He's a chairman of Thrissur branch during the year 2000 terms, from the year 2014 to 2019. He's a faculty member for various seminars conducted, speaking for tax practitioners, associations, various other business forms, topics on CHITs, NBFCs, direct taxes, indirect taxes, and now he has come up with Fema. Just like our chairman has told, he's regularly updating his knowledge and also sharing his knowledge to our members' benefit. Thank you. Let me introduce our speaker, Steve VIPIN KK, with these few words. Thanks. Requesting VIPIN sir to start the session. Over to you, sir. VIPIN sir.
Thank you, sir, for the nice introduction.
Thanks, sir.
I think
Our KSEB was got some problems with us, so at the right moment, the electricity also gone off.
Yeah.
Hope the presentation will not be like that.
No.
both chairman and VIPIN is sitting in the institute, I think so, because both screen got blank straight away.
Now it's okay. You can. Power has come.
Respected chairman of
Yeah,
the
yeah,
branch,
yeah. More power use. Don't worry.
respected chairman of the branch, CA Anup G, secretary CA Ajit Kaimal, vice chairman Aryan KK, senior members of the profession, and my dear friends. Good afternoon, all. Today's seminar on important export. When I thought about a subject to be taken, Sir Anup sir given me a privilege to optimize subject also. So I thought about at that time, it's better to opt for some subject that is not regularly followed by all the members. So in Trishur, Fema, I think, is a new subject for, not new actually, but many of them are not actually practicing in Fema. So I got some opportunity, get in touch with some of the good faculties who are dealing Fema at that time. And one faculty from Chennai who is a regular connect with me, he also helped me a lot. Initially, I thought about this Fema only at the time when my friend requested me about some of the Fema provision, because he was starting a new company and some of the foreign people or foreign collaborators who are intended to invest in their company. So at that time, there was nobody in Kerala who could we just consult and have an opinion on this topic. So we had to go to Bangalore for consultation, and for each question they charged us. So considering that huge amount, I thought that it will be better for us to prepare ourselves, because our client should not suffer because of all these provisions. Ultimately, there is one great danger in Fema is that in all other act there is a limitation period. In income tax, after 6 months, 6 years, we cannot reopen that. That's, of course, there is some exception, but in Fema, it can be reopened at any time in your lifetime. So it's a very dangerous provision, very dangerous act, and very difficult to learn also. Before going to our presentation, I will first start with the export of goods and services. After that, we will complete the import of goods and services. It is important to have a look at the basic structure of this act and the various regulators. Who is regulating all these things? This is very important, because Foreign Exchange Management Act is a very small act with 49 sections. Considering that, it is very easy to learn, because there is only 49 section, even considering with the income tax and other GST sections, this is very small number of sections. But the catch is that there are 8 another rules issued by the central government. Rules are issued by the central government. Then there are regulations. The basic regulator for this Fema is Reserve Bank of India. So they issue regulation for regulating Foreign Exchange Management Act. There are 24 regulations are there on various topics, various subjects. Then RBI also issue master direction on various topics, including export of goods and services and import of goods and services. Master directions are there. 20 master directions are there altogether on various topics in Fema. then notifications issued by the central government, and press releases by the RBI. So when we go give an opinion on FEMA on any topic and on any subject, it is very important we search it properly, because we need to understand where these items are correctly given in various regulations and rules and act. So that is so that it is important to have and knowledge about the structure of the FEMA. Now we can get into the discussion for today's topic: export of goods and services. This topic is little bit boring. When I started preparing slides for this seminar, I felt it very difficult to create slides, because I couldn't sit for half an hour to complete a slide, because some of the provisions are little bit irrational, or I couldn't say it is irrational, but it was little bit boring for me to learn, and I couldn't sit for half an hour at a time to learn these provisions. So I thought that it will also be boring for the person who are hearing it. That is why, that may be the reason for the persons attending the seminar is also comparatively less. But I tried my maximum to minimize that boring. So we will start with the first slide. Here, export of goods and services. Foreign exchange transactions related to export of goods and services are treated as current account transaction. These are current account transactions and are freely permitted. There are, all of you might be knowing, there are two types of transaction basically in FEMA, that is capital account transaction and current account transaction. For capital account transaction, there are a lot of restrictions, but in current account transaction, the restrictions are minimum. Almost everything is permitted except regulated. So these export transactions are treated as current account transaction. Then various applicable regulations are we have listed out. Under FEMA Act, Section 7 deals with the export of goods and services. Then Foreign Exchange Management Current Account Transaction Rules 2000. The rules are notified by the central government. Foreign Exchange Management Export of Goods and Services Regulation 2015 issued by the RBI, and RBI Foreign Exchange Department Master Direction number 16 2015-16 dated 1/1/2016 on export of goods and services. These are the various regulations governing export of goods and services. And it is important to just know the definition of export as per the FEMA Act and regulation. Regulation 2(4) of the FEMA Foreign Exchange Export of Goods and Regulations 2015, export is defined. Service is defined in FEMA Act. Export is defined in regulation for export of goods and services regulation, and services is defined in Foreign Exchange Management Act. Just have a look at the definition of export of goods and services. Is that the definition given is an inclusive definition. Is very broad also. Taking or sending out goods by land, sea or air on consignment or by way of sale, lease, hire purchase or any other arrangement, whatever name called. Is a broad definition. Taking or sending out goods, that is the main criteria for the export of goods. The medium may be land, sea or air. It may be consignment, it may be sales, it may be lease, it may be hire purchase or any other arrangement. These are the broad definition about export in export regulation, import-export regulation. In case of software, export includes transmission through electronic media. In that definition, it is given that in case of export, there is no requirement of physical movement of goods, but transmission through electronic media will also be treated as export. And for services, the definition given in FEMA Act, it means exhaustive. It gives an exhaustive definition. It start with it means service of any description made available to potential users. though the explanation definition start with it means, subsequently it gives an inclusive definition and includes banking, finance, insurance, medical assistance, legal assistance, chit fund, real estate, transport, processing, supply of electrical and other energy, boarding and lodging or both, entertainment, amusement, or powering of news or other information. All these things are covered under service. But services are service does not include rendering of service free of charge and contract under a contract of personal service. These services are excluded from the definition of service as per Fema. Before getting to the declaration form, basically the export involves goods are exported outside India and the remittances are received from outside. Exporting of goods involves some procedure. These procedures are basically mentioned in Fema with regard to Fema. For that, export and import regulations are there. Regulation 3 and 7 of Foreign Exchange Exports of Goods and Services specify the declaration of export. What are the declarations to be filed for export of goods or services? In the case of goods, declaration required is EDF, that is Export Declaration Form. EDF is required for export of goods. In case of services, that is only for software, otherwise than in physical form. If it is in physical form, it will be covered under EDF. If it is not in physical form, transmitted through a medium, in those cases, soft text form need to be filed. These forms are applicable for export other than export to Nepal and Bhutan. Evidence in support of declaration to establish some details to be submitted along with the export declaration form that is given in Regulation 7. Exporter is a resident in India because there should be two parties to the transaction. There should not be any illegal transaction happening between these two parties. So identification of the party is also very important. So exporter is a person resident in India and has a place of business in India. That should, some documents should be submitted to prove those the person is a resident in India and has a place of business in India. Destination specified in the declaration is final place of destination of the goods exported. When the goods are exported, the destination is specified in the declaration. Destination of the final destination of the goods is specified in the EDF. That should be the final destination of that goods exported. It should be specified in the export declaration form. And the value stated in the declaration represent full value of exports of full value of goods or software. Value stated in the declaration represent the full value of goods or software. So that is the amount that party, the exporter, required to collect from the overseas party. If that amount is not available, value exporter expect to receive in the prevailing market condition. If the exporter what he is intended to recover from the overseas buyer, that is the value of export. These provisions are contained in RBI Foreign Exchange Department Master Direction number 16, 2015-16 dated 1/1/2016. EDF form and soft text forms are given in RBI Foreign Exchange Department Master Direction number 18, 2015-16. The format is given in that Master Direction 18/2015-16 on reporting. This is the broad idea of about export declaration form, the declaration of export. Then for some parties or some activities, exemption for furnishing export declaration is given. That is given in Regulation 4 of Foreign Exchange Management, Export of Goods and Services, Regulation 2015. Trade samples of goods or publicity material supplied free of cost. Trade samples may be exported for which export declaration form may not be needed. Then personal effects of travelers. Personal effects of travelers, export declaration is not required. Goods supplied under the orders of central government, military, navy or air force for their requirement. For their requirement, central government, military or navy supplies goods. For that purpose also, export declaration is not required. By way of gift of goods, if the value does not exceed 5 lakh per annum, this is a declaration. A declaration is not required. If the gift is not exceeding 5 lakh per annum, then export declaration form need not be filed. Then aircraft engine and spare parts for overhauling and repair abroad to their re-import within 6 months. Aircrafts are sent abroad for overhauling and repair and subsequently re-imported within 6 months. Exemption is given for furnishing declaration. Re-export of leased aircraft. As aircraft are leased from outside India and same is re-exported. In that case also, re-export on account of repossession by the overseas lessor. If the overseas lessor repossess that aircraft and re-export that, for that also export declaration form is not required. Goods imported free of cost on re-export basis. If the goods are imported free of cost on a re-export basis, if it is re-exported, in those cases also export declaration form is not required. In for SEZ and EHTP and STP, FTZ, Development Commissioner permits re-export in case imported goods found defective for replacement by the suppliers. In those cases, export declaration is not required. Imported goods are found defective and the same has been exported outside or returned back. And the goods imported on loan basis from foreign suppliers or collaborators. And on loan basis, goods are imported from foreign suppliers and collaborators. And same is sent outside. In those cases also, export declaration exemption is given. Goods imported on free of cost and found surplus after production operation. In a SEZ area, goods are imported on free of cost and it found to be surplus to the production requirement. In those items also freely can be exported without any export declaration form. Replacement of goods exported free of charge. Excuse me. Goods are replaced in case some goods are exported found to be defective and free of charge that goods are replaced. In those cases also exemption is given for filing EDF. Goods sent for testing and re-import. If goods are sent for testing, then subsequently it is re-imported. In those cases also EDF is not required. Defective goods sent abroad for repair and re-import. Then export with the permission of RBI on application made when export proceeds are not to be realized. If export proceeds are not to be realized, there is no requirement to file EDF. Then with the permission of RBI, if an application is made with the permission of RBI also, they will definitely issue the permission since there is no export proceeds involved in the transaction. Then grant of EDF waiver, that is not exemption, full exemption, but limited exemption based on some turnover and some criteria fixed. If freely exportable items are exported free of cost for export promotion, there is a limit of 1 crore or 2% of average annual export realization during the preceding pre-licensing year banks are authorized to give waiver for the EDF if the export is lower than 1 crore and 2% of the average annual export realization. In those cases, bank can give EDF waiver. In the case of, that is in the normal cases, for pharma products and pharmaceutical companies, 2% of the average annual export realization during the preceding 3 licensing years. In the case of pharma products by pharmaceutical company, 2% of the average annual export realization for grant of EDF waiver by the AD bank. Then pharmaceutical products to UN, WHO, etc. limit is 8%. In those cases, no duty drawback or export incentive under an export promotion scheme shall be available. It should not be taken. Export of goods not involving any foreign exchange transaction directly or indirectly. If export of goods not involving foreign exchange transaction directly or indirectly require the waiver of EDF procedure from RBI. If foreign exchange transaction is not involved in export of goods, then EDF procedure waiver from the RBI is required. Then this submission of all these export declaration form and the procedure to be followed while submitting these bills to the AD bank. For those purposes, there are 2 categorization: non-EDA port and EDA port. So export is normally done through customs port. Right? 2 type of ports are there: non-EDA port and EDA port. No, EDA means electronic data interchange port. That is fully automated. There is no physical movement of any invoices or the shipping bills. Everything is normally through the software. For that purpose, RBI has already prepared a software. For import, there is IDPMS. For export, there is EDPMS. That is export. Using this software, these transactions are happening. But in case of customs non-EDA port, what is the procedure for this submission of export declaration form? We will verify that first. Customs, what are the procedure followed by the customs first? Customs shall certify the value declared in EDF and give a running serial number on 2 copies submitted by the exporter. 2 copies of the export declaration form is submitted to the customs, and customs shall certify the value declared in EDF. Earlier, in the earlier slide, we have seen that value to be declared in the EDF. That value will be certified by the customs and give a running serial number on 2 copies submitted by the exporter. Customs shall retain the original EDF. Original EDF will be retained by the customs for transmission to RBI through EDPMS and return duplicate copy to the exporter. Duplicate copy of the EDF will be returned to the exporter at the time of shipment. At the time of shipment of goods, exporter submit duplicate copy. Exporter submit that duplicate copy to the customs, and customs need to certify the quantity in the form. EDF duplicate is given to the exporter, and the type of shipment of goods, exporter submit duplicate copy of EDF to the customs and shall certify the quantity in the form. Form shall be returned for submission to bank for negotiation and collection of export bill. After certification quantity in form by the customs, the same shall be submitted to bank for negotiation of export bills. This should be done within 21 days and that document should be submitted to the AD bank named in the EDF. Export declaration form should mention the bank through which these transactions to be executed. This within 21 days, exporter shall submit duplicate copy together with the shipping document and extra copy of invoice to the AD bank. After documentation has been negotiated, sent for collection, AD bank report transaction through EDPMS to RBI and retain documents with AD bank. authorized dealer bank will retain that documents with them. They will report the transaction through EDPMS to RBI, and the documents will be retained with the bank. In some cases, RBI approval is also, or circular number is also referred, should be referred in the EDF in case of JVs abroad against equity participation or deferred credit arrangement. In those cases, RBI approval or RBI circular shall be mentioned in the EDF. Export on deferred credit arrangement or JV abroad against equity participation. If export is against JV against equity participation or under rupee credit agreement, RBI approval or RBI circular shall be mentioned in the EDF. If EDF is lost or destroyed, EDF can be, duplicate copy of the EDF can be accepted if certified by the customs in case it is lost. In case of software, export of goods or software done through EDI port, electronic data interchange port, in those cases, the physical submission of documents is not relevant, but shipping bill shall be submitted to authority concerned, Commissioner of Customs or SEZ. In those cases, shipping bill shall be submitted. Shipping bill is also not required. Exchange copy marked shipping bill also not required if it is integrated in the EDPMS. Otherwise, it is not integrated in the EDPMS. It will be duplicate copy. One copy of the shipping bill shall be returned to the exporter, marked exchange control copy for submission to the AD bank. Then other disposal of this EC copy and the same will be same as the non-EDA port. The shipping bill filing of shipping bill is not required if it is integrated with the EDPMS. Export of goods through post. If we are by post, we are exporting the goods. There are some procedure mentioned in the master direction. These EDF shall be countersigned by the authorized dealer. But the purpose of that countersigning is that it should be addressed to the branch or correspondent bank in the country of import. It should be addressed to the correspondent bank or branch of the authorized dealer bank of the country of import. For that purpose only, it is countersigned by the authorized dealer bank. And original copy is returned to the exporter. Duplicate copy shall be retained by AD, authorized dealer bank, as exporter shall submit necessary document along with extra copy of invoice for negotiation or collection within 21 days. Duplicate copy shall be retained by the AD, and exporter shall submit necessary document along with extra copy of invoice for negotiation bar collection within 21 days. Concerned overseas branch or correspondent shall be instructed to deliver the parcel to consignee against payment or acceptance of relative bill. Against payment or acceptance of relative bill, concerned overseas branch of the bank shall be instructed to deliver the parcel. AD countersign EDF address directly to consignee. Earlier it was AD will only countersign if it is addressed to the branch or correspondent bank. In other cases also, AD can countersign it if an irrevocable LC for full export value opened in favor of the exporter and has been advised through the AD concerned authorized dealer bank, or full amount is received in advance and AD is satisfied with the arrangement made for realization or the track record of the exporter. In these cases, AD can countersign without having the address to their branch or correspondent bank. Any alteration in the name and address of the consignee on EDF shall be authenticated by AD under his stamp and signature. Any alteration in name and address of the consignee. If there is any change in name or address of the consignee on EDF, same shall be authenticated by the AD. This is for export of goods through post. And other provision mentioned, I don't know whether any of the members are maybe familiar with these provisions, but still these provisions are there. Mid-sea transshipment of catch by deep fishing vessels. May not be applicable for all, but these provisions are there. Is applicable to those deep fishing vessels who are operating in the outer limits of our territorial waters. When they transfer or tranship their catch to other vessels from the deep sea itself, it is not possible to have customs certification at that time. So in lieu of customs certification, exporter may submit the EDF duly signed by the master of vessel. The master of vessel can certify instead of customs, indicating the composition of catch, quantity, export value, date of shipment, etc., duly supported by a certificate from the International Cargo Surveyor. A certificate from the International Cargo Surveyor is required on the EDF duly signed by the master of vessel. The composition of catch should be indicated in that, quantity should be indicated, export value and the date of shipment also indicated. The receiving vessel who is issuing bill of lading or receipt of transshipment should indicate this EDF number in that document. The EDF number given by the vessel should be mentioned in the bill of lading. The period of realization should be reckoned with reference to date of transfer of catch. So period of realization of 9 months given for the export realization should be calculated from the transfer of the catch that certified by the master of vessel, or that date is, or date of invoice, whichever is earlier. Both original and duplicate EDF copy should indicate the number and date of permit issued by the Ministry of Agriculture for operation of vessel. For operation of vessel, the permit from the Ministry of Agriculture is required. So it should indicate both EDF, both original and in a duplicate should indicate the number and date of permit issued by the Ministry of Agriculture for operation. Both copies of EDF shall be submitted at the registered port of the vessel or any other port approved by the Ministry of Agriculture. EDF original shall be retained by the customs for capturing data in customs electronic data interchange. So original shall be retained by the customs. Both these copies shall be submitted at the registered port and the original shall be retained by the customs. Customs will give the running serial number on the both the copies of EDF and will return the duplicate copy to the exporter. On running serial number will be given for these both the copies of EDF and will return the duplicate copy to the exporter. Submission of AD documents to AD bank, AD category 1 bank will be the same for other exporters. Whatever procedures mentioned in the earlier part, same will be applicable on submission of documents to AD category bank. That is with regard to export of goods. For export of software, the form mentioned is Softex form. All software exporters shall submit single as well as bulk Softex form in duplicate in Excel format to competent authority for certification. It can be filed single also in bulk format also. If there are lot of billing to a single client, same can be accumulated and bulk Softex form can also be filed. STPA and SEZ shall retain one copy and duplicate copy shall be given to exporter after certification. Here, one issue is there, whether the software exporter who is outside this STPA and SEZ, whether they are required to submit this Softex form. here is not specifically mentioned, but when we go through the soft text form, it is mandatorily required to be certified by the commissioner of SEZ or STPI. If you are not registered in this STPI and SEZ, it is not possible to get it signed by the commissioner. So in those cases, when the software exporter is outside these STPA or SEZ, it is not possible for them to file soft text form. If it is not possible, is in the intention of the government is that they are not required to file that STPI, these soft text form. So exporters outside these zones, STPA and SEZ, are not required to file, since it is not specifically exempted, but it's not possible to file because the valuation needs to be done. For that, certification is an important part from STPI and SEZ Commission. So it's most possible to, otherwise they have to take a registration. For EOU, it has been given. For EOU, they can register here and give a soft text form can be certified, certified by the commissioner. So similarly, the exporter who are not having any premises in these STPA or SEZ can have a registration with these STPA and SEZ by giving that registration fees, then can file this soft text form. Exporter is required to submit STPA and SEZ shall transmit details to RBI electronically. After certification, STPA and SEZ shall transmit these details to RBI electronically. Exporter is required to submit details of all invoices, including invoice less than $25,000 in bulk statement in Excel format. All invoices need to be submitted in the soft text form. Then the invoicing part of the soft text, these software exports. How to invoice these softwares? The invoicing in whatever software that we have invoiced is reported in soft text. So how to invoice this software export? For long duration contracts, exporter shall bill clients periodically. If it is a long duration contract, exporter is required to bill his clients periodically, and last invoice should be raised within 15 days from the completion of contract. Within 15 days of the completion of contract, last invoice shall be issued. Combined soft text form for all invoice raised on a particular overseas client, including advance remittance received in a month. Combined soft text form can be raised on a particular overseas client, including advance remittance received in a month. For a month, we can have a combined soft text form. Contract involving one-shot operation. The invoice bill should be raised within 15 days from the date of transmission. If it is a one-off transaction, invoice should be raised within 15 days from the date of transmission. Exporter should submit declaration in soft text in quadruplicate to the designated official of government at STPI, EPZ, FCZ, SEZ for certification bar valuation within 30 days from the date of invoice or date of last invoice raised in a month. 30 days from the date of invoice or date of last invoice raised in a month, exporter should submit the declaration to the designated officer for valuation. Designated official may also certify soft text form of EOU which are registered with them. He can also certify the soft text form of export-oriented units which are registered with them. So if it is not registered, it is not possible to certify. Invoices raised on overseas clients shall be subject to valuation by the designated official. Invoices raised on overseas client shall be subject to valuation by the designated official of Government of India, and consequent amendments shall be made in invoice. If there is any change as per the valuation done by the government official, accordingly invoices should be changed. That is with regard to soft text form. Then some other aspects in the EDF procedures are mentioned. All application correspondence with the RBI, EDF soft text specific identification number shall be invariably cited. If you are making any correspondence with the RBI, EDF and soft text specific identification number should be cited. In case of export of services where no declaration is specified, in case of export of service, not only export of software, other services also, if not, since there is no declaration is specified for other services, except for export from so export of software from SEZ and STPA, etc. For other export of services, no declaration is specified. Since it is not specified, there is no requirement to furnish such a declaration. But we need to ensure that the amounts are realized in accordance with the rules and regulations. The time period need to be followed. The foreign amount should be collected in the manner in which amount to be collected. All these things to be confirmed. Realization of export proceeds in respect of export of goods or software from a third party. If the realization of export proceeds in respect of goods or software is from a third party, it should be declared by the exporter in the EDF or soft text form. Otherwise, it's not possible to collect from the third party. The amount is to be collected from the third party. If AD category bank should ensure random verification of relevant duplicate forms by their internal or concurrent auditors. Check whether the non-realization or short realization is within the powers of bank. So random verification of EDF and soft text is required to be made by the concurrent auditors or internal auditors to verify the non-realization or short realization, if any, there is within the powers of the bank. There are some restrictions for percentage restriction has been fixed for realization or non-realization of the amount. So for that, if the bank has exceeded that powers, that need to be verified. When a part of shipment already covered in EDF, if a part of shipment is already covered in EDF and the same is short shipped, exporter must give a notice of short shipment to the customs. The shipment is covered in EDF, but it is not shipped or part of it is not shipped. The same should be informed to the customs. If there is a delay in obtaining certified short shipment notice from the customs, exporter shall give an undertaking to the AD bank. It should be informed to the customs and a certificate from the customs should be obtained. If there is a delay, in that respect, an undertaking should be given by the exporter to the AD bank. If the entire export is shut out, there is a delay in making arrangement for reship. Entire shipment has been shut out and there is a delay in arranging to reship. Exporter shall give notice of that same to the customs, attaching to the unused duplicate copy of the PDF. Since the entire shipment is shut out, duplicate copy is with the exporter. Same may be attached along with the notice given to the customs and the shipping bill. Customs will verify that the shipment was actually shut out. Customs should ensure that the shipment is actually shut out and certify the copy of notice as correct and forward it to RBI together with unused copy of EDF. In this case, original EDF received earlier from customs will be cancelled. Original EDF will be cancelled. If the shipment is subsequently made, a fresh set of EDF should be completed. Shipment is subsequently a fresh made and new EDF should be taken. There is consolidation of cargo in export where The export is happening by through air. Airline company will issue master airway bill to the consolidating cargo agent. In case the export is happening through airline, the airline company will issue consolidated air cargo airway bills to the cargo agent. Cargo agent will issue a house airway bills to the individual shippers. So individual shippers are approaching the cargo agent, and the cargo agent will approach the airline company for export. The airline company will issue single invoice to the cargo agent. A cargo agent in turn will issue house airway bills to the individual shippers. In those cases, AD Bank can and may negotiate house airway bills if it is specifically mentioned in the letter of credit. These documents are specifically provided for negotiation in those documents in lieu of airway bills issued by the airlines. It should be specifically mentioned in the letter of credit. Consolidation of sea cargo is also possible. AD Bank may accept forwarders cargo receipts issued by IATA approved agents in lieu of bill of lading for negotiation by collection in respect of export transaction backed by LC. If relative LC provides for negotiation of this document in lieu of bill of lading, is similar to the airway bill. If the LC provides for negotiation of this document in lieu of bill of lading, AD Bank may accept forwarders cargo receipt issued by IATA approved agent in lieu of bill of lading. In case export transactions are not backed by LC, AD may accept FCR issued by shipping company of repute or bar IATA approved agents if overseas buyers contract provide for acceptance of FCR in lieu of bill of lading. So after the export of goods and the submission of various documents with the AD Bank, it is now time for the realization of the repatriation of export goods, export proceeds. Export proceeds shall be collected or received within 9 months from the date of export for all exporters. For goods exported to warehouse outside India, it should be collected within 15 months from the date of shipment. Due to this COVID-19 pandemic, there are some relaxation with regard to the period for collection. If the exports are made up to July 31st, 2020, the period for realizing that export proceeds has been extended to 15 months from 9 months. Only for exports made up to or on July 31st, 2020. In those cases, proceeds can be received, export proceeds can be received within 15 months. For that, the manner of receipt of foreign exchange is mentioned in Foreign Exchange Management Manner of Receipt and Payment Regulation 2016, dated 2/5/2016. This specifies how these export proceeds should be received. For receipt of foreign exchange, there are some classification we need to understand. Here, the members of Asian Clearing Union have some mechanism. And from Nepal and Bhutan, Islamic Republic of Iran, all these countries, with these countries we have separate mechanisms. ACU is clubbed together. ACU means Bangladesh, Myanmar, Pakistan, Sri Lanka, and Republic of Maldives. These are covered under ACU mechanism. For other receipts of foreign exchange or other countries, receipts in rupees from account of a bank situated in any country other than the member country of the ACU. If amount is received in rupee from that country, that will be treated as a proper receipt under Foreign Exchange Management Act for the export of goods or services, or receipt in any freely convertible currency. For settlement under ACU, how this settlement mechanism work is that participants in ACU will have an option to settle their transaction either in ACU dollar, ACU euro, or ACU yen. So these countries, ACU countries, can settle their transaction. They have an option to settle their transaction either in this ACU dollar, ACU euro, ACU yen. This ACU dollar, ACU yen, or ACU euro shall be equivalent to $1, 1 euro, and 1 yen respectively. Banks are allowed to open. AD category bank in India are allowed to open AC euro and ACU yen, ACU dollar account with their correspondent bank in participating countries. In participating countries, these AD banks are allowed to open ACU dollar, ACU euro, and ACU yen account, and all eligible payment can be routed through these accounts. So separate bank account should be opened in the respective countries by the AD bank, and the transaction can be routed through these accounts. Receipt can also be made in foreign exchange. No need to convert to this ACU euro or ACU dollar or ACU yen. Other foreign exchange also can be done. An option is given to trade in other ACU yen, ACU dollar, and ACU euro. And for receipt of foreign exchange from Nepal and Bhutan, receipt can also be made in rupees. For Nepal and Bhutan, receipt can also be made in rupees. Receipt for export of goods to Nepal may be made in free foreign exchange provided importer resident in Nepal has been permitted by the Nepal Rashtra Bank. If the Nepal Rashtra Bank permit free foreign exchange, importer can also make payment, exporter can also receive payment in free foreign exchange. The receipt shall be made in a currency appropriate to the final destination mentioned in the declaration form, irrespective of the country of residence of the buyer. If the goods are exported to a country and the payment is received from another party or third party, if the final destination is given in another country, the receipt shall correspond with the respective country, the country of the final destination, respective final destination mentioned in the declaration. The currency appropriate to the final destination, place of final destination should be the receipt should be in that format. Receipt for export may also be made in the following manner. This following manner, receipt can also be made. That's in the form of bank draft, check, pay order, foreign currency note, traveler's check from a buyer during a visit to India, provided foreign exchange surrendered within 180 days from the 180 days with the authorized dealer of the exporter. Receipt for export may also be made in the form of bank draft, check, pay order, foreign currency notes, traveler's check from a buyer during visit to India, provided foreign exchange is surrendered within 180 days. It should be surrendered within 180 days. Then debit to FCNR account, NRE account, SNNR account maintained by a person resident outside India with an AD bank. In case same is settled through credit card, it can keep the form of rupee from the servicing bank against the charge slip signed by the buyer in rupee from credit card from the credit card servicing bank in India against the charge slip signed by the buyer. That is also a proper receipt under Fema. From a rupee account held in the name of exchange house with an authorized dealer. Exchange house, these money exchange houses maintain an account with the authorized dealer if the amount does not exceed 50 lakh per export. If the amount does not exceed 50 lakhs per export, amount can be received in rupees from in the name of an exchange house with the authorized dealer. In the form of precious metals, is also a manner of receipt, is mainly with regard to SEZ and EOU. Gold, silver, platinum equivalent to the value of jewelry exported to jewelry, gem or jewelry units. Equivalent to the amount of jewelry exported. Same can be received as precious metal, gold and silver. Any person resident in India may also receive payment for other than export by means of post order issued by post office situated outside India. Payment may also received in rupee by a person resident in India from SNR account of a person outside India. These are the various modes of receipt of foreign exchange under Fema. Then another mode of receipt of foreign exchange is processing of export related receipt through online payment gateway service providers. These OPGSPs. You can receive payment through OPGSPs. These are online PayPal, just like PayPal. From them also we can receive payment. There are some restrictions with regard to that receipts. AD bank are also allowed to enter into agreement with these OPGSPs, that online payment gateway service providers, and based on this agreement, the transaction can be carried on for this export, or facility may be facility for repatriation of export remittances may be done. Bank, for that purpose, bank should carry out due diligence of this processing online payment gateway service providers, and the facility available for export of goods or services should not exceed $10,000. If you are receiving amount through online payment gateway service providers, facility available for export of goods or services should not exceed $10,000. For settling these payments, AD Bank shall open Nostro or Vostro account for settling, and the only minimal amount shall be maintained in this account by with the OPGSPs by the exporter. It should be transferred immediately. Separate Nostro account shall be opened for various OPGSPs. And for permissible debits, repatriation for export proceeds, payment for fees or commission of OPGSPs. These are the permissible debit into these accounts. Amount in Nostro account shall be repatriated to exporters account with a bank in India on receipt of confirmation from the importer. Then settlement under the ACU mechanism we have already mentioned. Third party payment of the export transaction. If the payment is made to third party, it should be mentioned in the EDF and it should be routed through the banking channel and there should be an irrevocable order or a tripartite agreement. There is no requirement for this tripartite agreement if sufficient document is with the authorized dealer bank. If the export transactions are settled in currencies not having direct exchange rate, in those cases, if the beneficiary is willing to accept or willing to receive payment in the currency of beneficiary, in those transactions, amount can be settled in the currency of the beneficiary. Then foreign currency account international exhibition. For international exhibition, foreign currency accounts can be opened. That is for the permission is granted under regulation 5E5 of foreign exchange management, foreign currency account by a person resident in India, regulation 2015. Through this also, this foreign currency account open for international exhibition and foreign currency account out of India with the AD bank, foreign currency account in the name of overseas office, foreign currency account in SEZ unit, foreign currency account outside India by project service exporters. Through this also, export proceed can be received. Then diamond dollar account is there, exchange earners currency account is there, counter trade arrangement through escrow account which permits set off of account payable and receivable. There is a trade agreement through which the amount payable and receivable can be set off. In that also will be treated as a receipt of export under Fema. Josa raised hand. I saw that. I think it's better to have a discussion at the end, or else now we discuss. Or Ajit,
We can discuss at the end, VIPIN.
okay,
That would be good.
okay. EDF waiver, we have already discussed the EDF waiver for in the earlier part. There should be a request from the exporter for EDF waiver, and then some criteria as the 2% of average turnover. All these things we have earlier discussed, and we will get to the next part: the receipt of advanced against export. This is very important fact because many of our clients also having these receipts, advance receipts against export, but not settled. This main headache for this is with regard to banks. They are having this main headache for receiving advance and giving advance and not settling the same, because in the EDPMS and IDPMS they have to settle the transaction against the various shipping bill or bill of entry or bill of shipping bill. So if it is not settled, it will remain open, and it may happen that that exporter or importer may be caution listed. So for that purpose, the receipt of advance and advance against export is very important. That's provision. If advance, main issue with this advance is that it is treated as a capital account transaction. That is why these restrictions are kept on this, because it increases our liability with regard to the foreign exchange. Export should be within 1 year from the receipt of advance. If the amount of advance is received against export, export should be carried out within 1 year of the receipt of advance, and the restrictions of interest is there. Interest should be LIBOR plus 100 basis point. It should not exceed LIBOR plus 100 basis points. Receipts for long-term advance. Long-term advance is also eligible if it take long period to execute a contract. In those cases, long-term advance to up to 10 years can be received with exporters with good track record. For that purpose, maximum interest that we can give is LIBOR plus 200 basis points. Receipt of advance where manufacture and export takes more than 1 year. If in case of advance receipt received against export, if it take more than 1 year to manufacture and export, in those cases, maximum interest that can be given is LIBOR plus 100 basis points. In all these cases, banks should take proper care to follow these advances, ensure that the exporter comply with the provisions, and within period the same has been exported. In case of trade fair and exhibition abroad, EDF approval can be given by the authorized dealer bank. These are the responsibilities of the authorized dealer bank. In case of a trade fair or exhibition that is happening abroad, without the permission of the RBI, we can take goods abroad. An unsold item may be sold outside exhibition in that country or third country. If an item is unsold in that exhibition, the same can be sold in that country or in the third country, maybe in the discounted value. It can be sold in the discounted value. It can also be gifted. It can also be gifted, but there is a restriction of $5,000 per exporter or per exhibition or trade fair. The condition that authorized dealer bank should ensure is that exporter produce relative bill of entry within 1 month of re-import into India of unsold item. The exporter should produce the relative bill of entry of the items not sold within 1 month of re-import of same to the India. And the exporter shall report to the authorized dealer bank the method of disposal of all item exported. How these items are disposed, that should be reported to the authorized dealer bank. Such transactions approved by AD Bank are subject to 100% audit by the internal inspectors or auditors. It should be 100% verified by the internal auditors. EDS, for this purpose, RBI approval is not required. Authorized dealer can give an EDF approval in those cases. Then EDF approval for export of goods for re-import. If goods are exported for re-import after repair, maintenance, testing, etc., exporter shall produce relative bill of entry within 1 month of re-import. Within 1 month of re-import, exporter shall produce relative bill of entry similar to the exhibition and trade fair. Where goods being exported are for the purpose of testing, if it is exported for the purpose of testing and if it got destroyed during testing, AD Bank may obtain a certificate issued by the testing agencies. For a certificate from the testing agencies is sufficient to prove that it has been destroyed. It should be obtained by the AD Bank. For setting up of offices abroad and acquisition of immovable property for overseas offices, for initial expenses, 15% average turnover for last 2 years or 25% net worth, whichever is higher. Recurring expenses, 10% average turnover can be repatriated. Setting up of offices abroad and acquisition of immovable property for overseas offices. And initial expenses, 15% of the average turnover for the last 2 years or 25% of the net worth, whichever is higher, can be repatriated. Recurring expenses, 10% of the average turnover. In case there is a delay in submitting shipping document, that can be condoned by the AD Bank if there is a reason for that delay. without any prior permission from the RBI. Then the return of documents to exporter. The documents submitted to the AD bank for negotiation or collection should not be ordinarily returned to the exporter. That document should not be returned to the exporter. That's the responsibility of the AD bank. Then direct dispatch of documents by the exporter. Normally, for export of goods, transaction is document transfer is happening between bank in India to the bank in respective country of the person who is purchasing from us, from India. So documents should be dispatched to the by the AD bank to the overseas branches or correspondent bank. But in some cases, direct dispatch of document by the exporter consignee is allowed. These are how, in those cases, these are the cases in which direct dispatch is allowed. Advance payment received or irrevocable letter of credit received for full value. And AD bank also accede to the request of the exporter. And the track record of the exporter. In those cases, documents may be directly dispatched to the consignee or the agent. Direct dispatch of document by status holder exporter and SEZ unit is also possible, provided export proceeds are repatriated through AD bank named in the EDF. Duplicate copy of the EDF is submitted to the AD bank for monitoring purpose by the exporter within 21 days. In some cases, if it is not properly done, same can be regularized by the AD bank subject to a monetary limit of $1 million, provided the export proceeds have been realized in full. Exporter is a regular customer of for at least 6 months. Exporter account with AD bank is fully compliant with RBI extent KYC and anti-money laundering guidelines. In those cases, direct regularization is possible. We'll move a little bit fast because time is running out. Some area to be discussed is part drawing and undrawn balances. With regard to writing off, these are important because some part of trade, this is a practice that some part is not drawn or some part is maintained with the buyer itself, only other parties repatriated to the party. This consignment export is similar to the normal consignment here, and opening and hiring of warehouse abroad. These are procedures there. Then export bill register is there. Export bill register, this export party, AD bank should maintain export bill register. Then follow up of overdue bills. If there is any overdue bills, they should verify that what are the reason for overdue of bills. Then reduction in invoice value on account of repayment of usance bill. If bill is negotiated, if there is any reduction in the value on prepayment of usance bill, on account of prepayment, the respective interest rate is reduced. So reduction in invoice value on account of prepayment is the responsibility of the authorized dealer bank. Reduction in invoice value in other cases also. In some cases, there is a reduction in value due to reduction by value. That cases also will get covered. That also will be verified by the authorized dealer bank. And change of buyer or consignee. If there is change in the buyer or consignee, same should also be verified. Then extension of time. Extension of time may be provided for realization of export proceeds. some conditions to be conditions are there. It should be ensured that export transactions are not covered under any investigation, or AD Bank is satisfied that non-collection is beyond control of the exporter. If it is beyond the control of the exporter, extension of time may be given. There are some declarations to be given for given that it should be relaxed within the extended period of time, but extension can only be given at a time for not more than 6 months. If he has filed a suit abroad, the extension may be granted without any restriction or amount involved. Next is the unrealized export bills. If for export bills, write-off is permissible, self write-off is permissible. In those cases, CS certificate is required 5% of the export receivable or export proceeds realized during the previous current year. Total 5% of the export proceed realized during the preceding calendar year can be written off without any objection from this in the case of self write-off. But for that purpose, CA certificate is required. While certifying, CA should ensure that what are the conditions, what are the reason for this write-off, whether this party is not traceable, whether this he is declared insolvent, all these things to be verified by the chartered accountant before giving a certificate. If any okay. These are with regard to the CS. Then self write-off by status holder exporter. For status holder exporters, this limit is 10% instead of 5%. And for write-off by AD Bank, the limit fixer is 10%. AD Bank can write off up to 10% of the total export proceeds realized during the previous calendar month. If the amount exceeding this amount, the prior permission is required. Set off of export receivable against import payable is permissible, subject to the conditions. Conditions are specified. Conditions are specified in the rules. We are not going into the details about that. Netting off of export receivables against import payment for SEZ units are also permissible. Then exporters caution list is there. This exporters caution list is for the purpose of non-compliance of any filing of documents. If there is any non-compliance from the exporter, if after making advance payment, not importing goods, and after receiving advance payment, not exporting goods, not submitting bill of entry, not submitting shipping documents, all these things are default of the exporter. For that purpose, exporters may be caution listed. So important on the part of the exporter to be compliant. So it is also the obligation of the authorized dealer to ensure that the exporters are not caution listed. Then commission payment is with regard to agency commission for export. It should be declared in the EDF or Softex by the authorities, declared by the authorities. They are all, and the relative shipment has already been made. If both these conditions are complied, payment of commission can be made. Then for export covered under counter trade agreement through escrow account designated in US dollar, in addition to the above two conditions, commission not payable to escrow account of the holder themselves, and commission should not be deducted from the invoice value. Then payment of commission is prohibited on export made by Indian partners towards equity participation in overseas JV or wholly owned subsidiary, as also exports under rupee credit route, except commission up to 10% of the invoice value of export of tea and tobacco. Then a refund of export proceeds originally received may be considered refund of export proceeds on re-import goods into India due to poor quality. It can be refunded due to poor quality. It should exercise due diligence regarding this, regarding the track record of the exporter. It should verify the bona fides of the transaction also. obtained from the exporter certificate issued by DGFT per customs that no incentive has been availed in respect of those transactions. Obtained from the exporter and undertaking that the goods shall be re-imported within 3 months from the date of remittance. All procedures as applicable to normal import also needs to be adhered. These are the points to be discussed on. Points I would like to discuss on export of goods and services. Now we will go directly into import of goods and services. Similar to the export of goods and services, these are also current account transaction. Import of goods and services are also current account transaction. The applicable rules and regulations are that section 5 of Fema, import trade is regulated by DGFT. There is no rules or regulation for import. These are regulated by the DGFT, Director General of Foreign Trade, and the RBA, Foreign Exchange Department Master Direction number 17, 2016-17, dated 1/1/2016 on import of goods and services. This IDPMS in export it is EDPMS, import data processing and monitoring system. Here it is IDPMS, and some other website also with regard to customs they have ICE gate for data interchange. All the import transactions are happening through IDPMS, and with regard to the customs data that will happen to the through ICE gate. Remittance of import payments. Import payment, how the amount should be remitted. For the purpose of remittance, after ensuring it should be AD Bank should ensure that all requisite details are made available by the importer. For the purpose of making remittance, bank should ensure that all the details are given by the party for making payment. So what are the documents available? Postal appraisal form. The documents are for the evidence of import. That include postal appraisal form, customs assessment certificate, etc. And he should ensure that this equivalent to the amount, equivalent to the value has been exported. AD Bank should ensure that amount equivalent to the amount remitted. That amount has that quantity of items has been received as an import. Remittances are for bona fide transaction. So in case of remittance of import payment, AD Bank may allow remittance after ensuring all requisite details are made available by the importer. Remittances are for bona fide transaction. Import licenses, actually it is not licenses right now, it's an import authorization. In FTP, some they have classified items in the negative list. In those items, import authorization is required. AD Bank is free to open LC and allow remittance for import, except items included in the negative list. That is, which require licensing under a foreign trade policy in force. While opening LC, for exchange control purpose, copy of the license shall be called for and adherence to the conditions verified. Bank shall preserve the copies of utilized licenses till they are verified by the internal auditors or inspectors. This copy, exchange control copy, shall be called for, and if there is any condition attached to that license, they should be verified while opening letter of credit. AD Bank shall preserve the copies of utilized licenses. If licenses are utilized, the copies of the same shall be preserved by the internal auditors or inspectors. Obligation of purchaser of foreign exchange for import of goods. For import of goods, there are obligation on the purchaser of foreign exchange. Purchaser of the foreign exchange means who's importing goods. As per the RBI Foreign Exchange Department Master Director, any person acquiring foreign exchange is permitted to use it for the purpose mentioned in the declaration given to the AD Bank or for any other permissible purposes under the Act or rule. It can be used for the purposes given in the declaration. Whereas used for the purpose of import of goods, if the purpose given is for the import of goods into India, AD Bank should ensure furnishing evidence of import and also ensure goods equivalent to the value of remittances are imported. If and a person resident in India may also pay payment other than in these modes, a person resident in India can make payment. Payment of import through international credit or debit card, payment in rupee for expenses of hotel, travel of person resident outside of India, payment for gold or silver by check when imported under import policy, payment in rupees to non-all-time director who is resident outside India, sitting fee, travel expense for visiting India for companies work. In these cases, a person resident in India may also purchase foreign exchange. Time limit for settlement of import payment. There are some certain time limit fixed for settlement of import payment. Time limit for payment of normal import. Remittances against import should be completed not later than 6 months from the date of shipment. Remittances against import should be completed not later than 6 months from the date of shipment. In addition, this period has been extended similar to the extension given for export. This has been extended to 6 months to 12 months for import made on or before July 31st, 2020. For import made on or before 2020, that has been extended to 12 months from 6 months. Some exceptions are there. If the same amount is withheld towards guarantee of performance, there is no time limit for that. If these 6 months or 12 months, as mentioned here, that time limit is not applicable in case the amount is withheld towards guarantee of performance. AD Bank may permit settlement of import dues delayed due to dispute, financial difficulty, etc. If due to dispute or financial difficulty, the importer is not able to settle the payment, AD Bank may permit delayed payment. For that purpose, bank may allow payment of interest on delayed payment for a period up to 3 years. Up to 3 years, and interest on delayed payment may be allowed at a rate prescribed in trade credit. For trade credit, there is a separate regulation. There is separate interest and the terms and conditions are specified in that is for external commercial borrowings and in trade credit regulation. The conditions of interest rate is specified in this regulation. In case of prepayment of usance import bill, in case import bills are accepted and the amount is prepaid, remittance can only be made after reducing interest for unexpaid portion of usance bill at the rate at which interest is claimed or libor of the currency in which goods have been invoiced. At the rate which interest is claimed or libor of the currency in which goods have been invoiced. If in the case of prepayment of usance bill. Where interest is not specifically claimed in or expressly indicated, remittances may be allowed after deducting proportionate interest for unexpaid portion. After deducting proportionate interest for unexpaid portion, usance bill at the prevailing libor or currency of invoice, proportionate interest for unexpaid portion of usance can be made. Deductions can be made. In case of change in value due to the above factors, in case of change in value due to the payment of amount to the outside party, then the AD bank should ensure that there is a proper remark or indicator is entered for the outward remittance message mark off in IDPMS. In the IDPMS, the proper remark or indicator is entered for the same due to the change in value due to the above factors. In case of deferred payment arrangement, deferred payment arrangement including suppliers and buyers credit can be made up to 5 years. These directions are given in Master Direction External Commercial Borrowing and Trade Credits. These directions and guidelines shall be followed in case of deferred payment arrangement including suppliers and buyers credit up to 5 years. Time limit for payment of import of books. Remittances against import of books may be allowed without any restriction to the time limit. Interest payment will be in terms of direction discussed as per the trade credit and external commercial borrowing direction. The extension for time of making payment of import. In addition to the extension that has been given by the RBI, this AD bank can give an extension up to a period of 6 months at a time, maximum of 3 years, irrespective of invoice value on account of dispute, financial difficulties, importer filed suit against seller, etc. While granting extension of time for making payment, AD bank should ensure that import transactions are not under investigation by the Enforcement Directorate or CBI. While considering extension beyond 1 year, total outstanding of importer shall not exceed $1 million or 10% of average import remittance during the preceding 2 financial year, whichever is lower, while considering the extension beyond 1 year. Date up to which extension is given shall be indicated in the remark column while reporting in the IDPMS. Approval of RBI if the aforesaid conditions are not fulfilled. If the aforesaid conditions are not fulfilled, extension of time can only be given with the prior approval of RBI. Import of foreign exchange. No person without the general permission of RBI import or bring into India any foreign exchange. These governing provisions are Section 63G of Fema, Foreign Exchange Import, Export and Import of Currency Regulation 2015. A person may send into India without limit foreign exchange in any form other than currency note, bank note, traveler's check. So without any limit, a person can send foreign exchange to India. A person can bring without any limit other than currency note and bank note. A person can bring into India from any place outside India without limit foreign exchange other than unissued notes, provided he make a declaration, currency declaration form. Currency declaration form is not required if the aggregate value of a foreign exchange at any time, one time, does not exceed $10,000 or its equivalent. If the amount does not exceed $10,000 or is equivalent, this CDF is not required. If cash portion alone exceed $5,000 at any one time. If it is exceed 10,000, foreign exchange exceed $10,000 and the cash portion alone exceeds $5,000 at any one time, CDF currency declaration form is required. A person going a person resident in India who had gone out of India on temporary visit and he is bringing to India currency note, he can bring up to an amount not exceeding rupees 25,000. Person may bring to India from Nepal and Bhutan only Indian currency denomination up to 100 rupee, but with effect from 2023-2019, rupee 500 note also permitted to taken out of India to Nepal. He can only bring rupee 100 rupee denomination note, but with effect from 2023-2019, 500 notes are permitted to taken to Nepal. So naturally, the unspent amount should be allowed to brought back. Third-party payment for import transaction. In case of payment is made to third party, similar to the payment made in the export transaction, some area should be verified. AD Bank should ensure that there is a firm irrevocable purchase order or tripartite agreement. There should be a tripartite agreement or an irrevocable purchase order for the same. AD Bank, authorized dealer bank, satisfied with the bona fides of the transaction and also should consider the financial task force statement before handling the transaction. So, in order to avoid the money laundering activities, the AD Bank should ensure that these transactions are bona fide and the financial task force statement should be considered before handling this transaction. The third party should not be a party in those countries which has been mentioned in the financial task force statement. Invoice should contain narration that the related payment has to be made to the named third party. The invoice should have a narration and also bill of entry should also mention, in addition to the shipper, as a narration that the related party has to be payment has to be made to the third party. Importer should comply with the related extent instructions relating to import, including those on advance payment being made of import of goods. Guarantee for import on deferred payment basis can be given by the issued by the authorized dealer bank. Guarantee or letter of comfort for import of goods can also be issued by the authorized dealer bank. But for issuing guarantee, there are some restrictions with regard to the amount. No guarantee exceeding $5 lakh can be given by a AD category bank. If guarantee given is to an PSU, if it exceeds $1 lakh, prior permission of Ministry of Finance of Government of India is required. If the guarantees exceeds $5 lakh, it's not possible to give guarantee by an authorized dealer bank. If the guarantee given is less than guarantee given exceeds $1 lakh, prior permission of Ministry of Finance, Government of India is required in case of PSUs. Then advance remittances for import of goods. Similar to the export, we receive advance remittances for import. These advance remittances are treated as capital account transactions. If advance exceeds $2 lakh, an unconditional irrevocable standby letter of credit or guarantee from international bank of repute outside India. If advance exceeds 2 lakh, an unconditional irrevocable letter of credit is required or a guarantee from an international bank of repute outside India, or guarantee from an AD bank, guarantee from an authorized dealer bank in India, if such guarantee is issued against counter guarantee of an international bank. If guarantee is received from India, such guarantee should be against a counter guarantee of the international bank. For advance up to 50 lakh, Authorized dealer bank is permitted to receive advance up to 50 lakh other than PSU. Overseas supplier unable to obtain guarantee. If the overseas supplier unable to obtain guarantee, the advances is more than $50 lakh. Bank is satisfied with the bona fides and track record of the importer. Authorized dealer bank may not insist upon guarantee or letter of credit for the above advance. For PSUs, if it is exceeding 1 lakh, there should be a specific permission from the Ministry of Finance, Government of India. AD bank should also follow IDPMS guideline while allowing remittances of advances. There is separate procedure specified for IDPMS, so it should be properly followed. Prior approval of RBI is required in any other cases of advance remittances. In case of import of services, banks may allow remittances without any ceiling subject to the following condition. There is some condition for import of services also, advance against import of services also. If the advance exceed $5 lakh, guarantee from the International Bank of Repute outside India or guarantee from AD bank in India, if such guarantee is issued against counter guarantee of international bank, similar to the advance in respect of goods. If advance without bank guarantee exceed rupees 1 lakh for PSU and government etc., approval from the Ministry of Finance of Government of India is required. Authorized dealer bank should follow up the advance to ensure beneficiary fulfill his obligation. These advances should be properly followed up to ensure that beneficiary fulfills his obligation. Authorized dealer bank should ensure generation of outward remittance message and marking in ID PMS. It should be ensured. Interest on import bills in case of prepayment, this is already been discussed, we will skip it. Remittances against replacement import. Short ship damaged, short landed or lost in transit. If it is if the goods are short shipped, damaged, short landed or lost in transit, exchange control copy of the import license has been already been utilized to cover the opening of an LC against the original goods. Original endorsement to the extent of the value of goods lost may be cancelled, cancelled by the AD bank. If it is short shipped and damaged, goods are short shipped or damaged or short landed or lost in transit, but exchange control copy has been fully utilized for open LC against the original goods, then original endorsement to the extent of the value of lost goods may be cancelled by the authorized dealer bank. Remittances for the replacement import may be permitted without reference to the RBI, provided insurance claim in respect of lost goods is settled in favor of importer. Insurance claim should be settled in respect of in favor of the importer. In those cases, reference to the RBI is not required. It may be ensured that replacement import is made within the validity period of the license. If there is a validity period for license, import should be made within those validity period. Guarantee for return of defective goods by AD bank if replacement import is made earlier. Guarantee for return of defective goods by the if replacement goods is made earlier, replacement of goods is earlier made, then the guarantee for return of the defective goods should be made to the AD bank. These call centers and BPO companies, we will just skip it. I think its time is. receipt of import bills and documents. For making payment, receipt of imports bills and documents is important. AD banks are responsible for generating outward remittance message. If advance payment is already made or payment or needs to be made against the bill for import, in these cases, AD bank should receive the import documents. Import documents should be received by the banker in India from banker of overseas supplier, not by the importer directly. Normally, it should be banker to banker transaction, but some exceptions are given. It's a liberal exemption. If the value of import does not exceed US$ 3 lakh, import bills received by wholly owned subsidiary of foreign companies from the principals, import received by status holder exporter, 100% export oriented units, SEZ, PSUs and limited companies, import bills received by limited companies, public limited, deemed public limited, private limited companies. So direct receipt is allowed in majority of cases. The first, initially it is mentioned that import documents should be received by the banker in India from banker of overseas supplier, not by the importer. But reading these exceptions, I think there's a liberal exception. Almost every cases, this direct receipt is permitted. In case of diamond precious stone, receipt of import document by the importer directly from the overseas supplier is possible. It is permitted also. Permitted to the non-status holder importer up to US$ 3 lakh as in the earlier case. Documentary evidence of import is submitted at the time of remittance. Status holder importer can receive document directly from the suppliers without any seal. If it is a status holder importer, he can receive document directly from the suppliers without any sealing. AD Bank should ensure that import is subject to prevailing foreign trade policy. Transactions are bona fide. AD Bank should also do the KYC and due diligence exercise of the customer. Receipt of import bills or document directly from the overseas supplier. If AD category bank receive import bills directly from the overseas supplier at the request of the import client, bank should ensure that the financial standing or status of the track record of the financial standing or status and track record of the importer. A report may be received from the overseas supplier on report on each individual overseas supplier from overseas banker or a reputed overseas credit agency. A report shall be taken from individual overseas supplier from overseas banker or a reputed overseas credit agency. The above report is not necessary. If this report is not necessary, if invoice value does not exceed US$ 3 lakh and AD bank is satisfied with the bona fides of the transaction. Otherwise, this report is required. In case of physical import of goods, irrespective of value of foreign exchange remitted for import to India, it is obligatory on the part of AD bank to ensure importer shall submit bill of entry, port code, date for marking evidence of import under IDPMS. Then customs assessment certificate, then import for goods imported stored in free trade zone, exchange control copy of the ex-bond bill, import on delivery against acceptance basis is also possible. Import reporting by the AD bank is required in IDPMS for these details. All these details should be reported through IDPMS. In lieu of import bill of entry, a certificate from the CEO or auditor of the company can also be accepted by the authorized dealer bank. If the foreign exchange remitted is less than 10 lakh, importer is a company listed in a stock exchange in India, net worth is less than 100 crores, or importer is a PSU or undertaking of government of India or its department, facilities extended to autonomous bodies like IIT, IAS, etc. In case of non-physical import, certificate can from the chartered accountant can be used. for settling the transaction as an evidence of import. Verification, this document evidencing import should be verified by the internal auditor. This should be preserved by the bank for 1 year for verification, for subsequent verification. In case if it is covered under any investigation, only after obtaining clearance from the agencies. There should be a proper follow-up of import evidence import evidence by the AD bank. If the importer is not submitting the details within the time, there should be a proper follow-up and ensure at least one communication by registered letter is sent to the importer. One more is merchanting trade. Merchanting trade is a trade where the goods are not entered into a domestic tariff area and returned back, or importer and exporter. These both legs of transactions are there. Not entering into the domestic tariff area, but without entering into the domestic tariff area, same has been exporter. For these are the conditions for the goods required should not enter to domestic tariff area, and the state of goods should not undergo any transformation. AD Bank should ensure that all the rules and regulations of export are complied with, except EDF and bill of entry. Export declaration form and bill of entry is not required. Both the merchanting trade transaction should be routed through AD Bank. Entire transaction should be concluded within 9 months. There should not be any outflow of foreign exchange beyond 4 months. And commencement is the date of shipment bar export leg receipt or import leg receipt, whichever is earlier. For completion, whichever is later. Short-term credit, buyer credit, etc. available for this merchanting trade transaction. In case advance against export leg is received, it should be ensured that it is earmarked for making payment against import leg. Merchant trader is allowed to make advance payment for import leg on payment on demand made by the overseas buyer. Then payment of import beyond $2 lakh per transaction should be made against bank guarantee. LC to supplier permitted against confirmed export order. These are some of the other conditions for merchanting trade. Then processing of import related payment through OPGSPs, similar to the that we have discussed. This OPGSPs, there is a ceiling for amount of $2,000 tender into standing arrangement with OPGSPs. Balance held in import collection account shall be remitted to overseas exporters. There's a nostro account should be repatriated without any delay. The only 2 days delay is there. These are the permitted credits. Permitted credits from this account is collection from Indian importer through credit card, debit card, and banking. Charge back from overseas. The permitted debits are payment to overseas exporter in permitted foreign currency. Payment to importer. These are the various permitted debit. With this, we will conclude the discussion on import of payment. Now we will take up any questions.
Do we have any questions, Ajit?
Yes. Just looking into. No Q&As has come yet, but I think someone has raised his hand in the middle of the session. Dear members, we have come to the end of the presentation. We are moving on to a short question and answer session. I do invite the members to ask their queries to the speaker. Okay, let me set the ball rolling. Vipinji, shall I ask a question?
Yes, yes.
Okay, now what happened was one of my clients is into the regular importing of materials on a regular importing of materials.
Okay.
Now, what happened was one consignment after clearance, it was found to be defective, and the payment was put on hold for last 1 year.
Okay.
Now, what happened was during this audit that we had done, a conclusion was arrived by the management that the amount that is payable is shall be written off, and the company from outside India, they also confirmed by email that it can be written off. Now, what is the procedure of writing off the same?
Writing of the payable.
Yes, payable.
So he already taken that import. He accepted that import,
Yes.
and the payment, the bills are negotiated, and the bills has been negotiated for payment.
Yes.
Now it is being written off. So for
Yes.
that writing of purpose, they have to produce.
And the figure was there for almost around 6 to 7 months or something. It was there.
Okay. 6 to. Hello. 6.
I think there is some connectivity issue with his internet. Ajit?
There is no specific restriction for writing of this amount in the Fema actually. For writing of our receivables, there are specific regulations, but banks should ensure that their importer is not simply writing off the amount. For that, you should get some documentary support, ensuring that these goods are not good or defective or destroyed. To ensure that some documentary proof should be submitted to the authorized dealer bank, and with the permission of the authorized dealer bank, confirming or convincing the authorized dealer bank, same can be written off. There is no specific provision given for writing of amount payable.
Okay.
That is what I feel. I'm not expert on this, but what I have gone through, I feel that there is no a specific for permission provision for writing of that amount.
Okay. So we can just submit a letter stating that the goods is defective and the company has given an email for the writing off to the dealer bank.
Along with the supporting document. So why you are telling that it is a defective? If it is defective, the correspondence will be there with the overseas supplier. The same can be submitted along with the certificate from an expert who can certify that this is a defective goods. It's not usable. Same may be taken from the an expert. Along with this document, you can submit to the AD bank. Then same can be closed. The AD bank need to close these advance or this bill of entry. Otherwise, it will remain open. So, in order to close it, it should be better on the part of the importer to take effective step, including submitting the documents.
Vipinji, I think if you can just open the Q&A, a member has sort of a query.
One of my client act as intermediary for foreign vessel owner and collected money on his behalf from Indian party, or failed to repatriate it to the vessel owner for the last 1.5 years. What will the repercussion of this? Intermediary of a foreign vessel. So the party is, your client is in India or outside India?
I think she has my client is based out of India. The second, in continuation with the question there is.
So the client is based out of India, so it is outside India, and it acts as an intermediary for a foreign vessel owner and collected money on his behalf from an Indian party. So since it is client is based out of India, what is the issue with regard to FEMA? Client is at Chennai. Okay, okay. Client is at Chennai, and he collected amount on behalf of an Indian party for a foreign vessel owner. So to repatriate that amount, the client in Chennai need to get some document from that foreign vessel owner. Is there any document available for that, against which the amount can be repatriated? Without the document, it is impossible to repatriate that amount. So it is important to have a document against which that amount can be repatriated. But since the year has been elapsed, the 1.5 years has been elapsed, already 6 months has already been crossed. So a authorized dealer bank can give relaxation for making that payment, but you should ensure that there is a reason for not making the payment. So you need to convince the authorized dealer bank there is a reason for this, and the reason is it can be you can convince the authorized dealer bank, they will allow to repatriate amount.
Is there any other query?
Any more queries, dear members? One more query, just for the general understanding. Lots of we have these expatriates coming into India of late, looking into working from home, and they will be rendering services from India to outside India right now. Now, whether rendering of service to outside India, we need to go for an import-export code, and if so, I do understand that there is a 5% export subsidy under the export export import subsidy scheme or something like that. If so, what is the procedure for the same?
I am not thorough with the export import code registration process, so that for that we need to check with the customs, because that procedure is covered under the customs, not under the FEMA. So I am not that much familiar with the procedure for that export import code registration. But in case that person is exporting from India, with regard to FEMA, he is not required to submit any declaration. So since it is not a software and not situated in SEZ, there is no requirement to have any export declaration. You can export. Only thing is that you need to take LUT or make payment of GST. GST you need to take.
Okay.
The IE code related provision, I am not that familiar, so I am not getting into it.
Sir, I think that's the end of the queries. Now the members have raised their hand, but there is no activity in the Q&A also.
So we can.
So I think we can wind up the session. I invite you for the closing remarks, sir.
Yes, Ajit. I should say a very difficult subject handled with ease. That's what I can say. I know the time of 2 hours given to you was very less, CA VIPIN. But with the stipulated time, you did a good job. Thank you, CA VIPIN, for studying the subject and giving such an exhaustive presentation to us. I think that PPT is very useful. We will share it. All the relevant applicable points are there in the PPT. Thank you for preparing such an exhaustive PPT. We've been almost 75 members attended in this Zoom itself. And with the YouTube presentation presence, I think the membership will cross 100. So that is not a bad VIPIN. And I'm sure that after say 10 years, CA VIPIN would be one of the most sought after professionals in Thrissur. So that is the way in which things are going. Thank you very much, CA VIPIN, for your presentation. And now over to you, CA Ajit, for the formal vote of thanks.
Thank you, sir. CA Vipin, sir, any closing remarks from your side?
Yes, yes, yes. Actually, it's for a long time. I actually 1 year back, I think, I have taken a seminar on that is on the physical platform, that is not online. I think I am not that comfortable in the online platform. So getting used to it is the now normal, the new normal for today onwards, or the recent situation due to recent situations. But still, I think I am able to present it reasonably well. I don't think it is a very good presentation, but it is reasonably well. But due to the subject involved, there is a lot of issues. So I tried my level best, because some of the issues are procedure oriented, but very difficult to keep in mind. The memory power is very important factor for that. So I will try the next time, if I get a chance to present FEMA, I will try to give a more better presentation. So I would like to thank the managing committee chairman for giving me an opportunity to present this paper, although a new topic. It's a relevant topic for all the practicing members. So, and all the participants who are logged into these YouTube and Zoom for getting to the seminar, getting to view this seminar, and also the persons who have asked the questions. The questions are also important, because specific queries makes us more get into deep into these queries and the areas to be covered, because this is a boring subject, since it is better to have a practical examples to have a good understanding of the topic. So once again, I thank all the members. Thank you very much.
I have a difference of opinion with what you said. Considering the subject, it's very rare that I was googling the same today morning and yesterday also, but I didn't see that much presentations even being aired like that. And I do find that there are extremely rare members from our profession practicing FEMA and things. And considering the same, and the 2 hours that you took, and there were lots of wonderful information that you passed, your presentation was quite good, and it was pretty interesting also. And we hope that lots of professional practice comes our way, so that what you presented can be applied by us professionally also. Now, moving into my vote of thanks. Now, I should say that India is among the world's top nations with respect to this export and import of merchandise. With this increased liberalization of trade by the Indian government, there is an abundant opportunity for establishing a profitable import and export business. For undertaking such type of business, an entrepreneur should have a very clear understanding of the rules and regulations, along with documentation pertaining to the transactions. The same has thrown out abundant professional opportunities for transactional advisory. That was why we at the branch wanted to do this VCM at the growth of advisory opportunities are quite huge and have good potential. I was just looking into the statistics last week, which had thrown up the details that India's exports, which had slumped like anything in this COVID pandemic, is in right now in touching distance of this 2019 levels. Now, our faculty say VIPIN KK, who is also a past chairman of the branch, has presented the subject in Ernakulam and other branches. Now, after the VCM, we do understand that he is quite an expert in the field. Now, say VIPIN KK, we have noticed he is very updated on income tax and FEMA. We always do notice that he is the first person to report landmark cases in our group. Anup sir, we should, his regular updates is in our WhatsApp group.
And please,
Now, thank you, CA VIPIN, for the wonderful presentation.
Thank you,
And
thank you.
thank you, CNU, for arranging our very learned speaker. Now, thank you, dear attendees, for the support. Your huge attendance has been a source of inspiration for Trichy branch to conduct VCMs on a very regular basis. Of late, we do understand, as Chairman rightly pointed out in his opening address, that the attendance is dropping. We know that the filing dates are dear and the members are quite engaged. So we have an we will be coming with the VCM next month only. Till then, stay safe. Thank you all. Thank you once again. Bye.
thank you.